waiting for it to start there in case we get questions over there.
So the YouTube should be unlisted.
It's unlisted. All right. Okay.
So there's no need to check on the YouTube at all today, Jack. It won't go live
cool.
until after the session is finished. We've been doing that all
nice.
week. It won't go live
cool.
until so. Yeah, we don't.
I like the new graphics on the onboarding title. I thought that looked really good.
Thanks. That was Ali.
Yeah. All right. Welcome, everybody. Welcome to the Bookmap Academy. We meet every Thursday and we go through your trades. We want to go through your journaling of your trades to give you feedback. It's a coaching and mentoring program. And the goal is so to get you journaling and then give you feedback. And let me show you the process here. If you go to bookmap.com and you go to the More button here, and then under Community, Bookmap Academy. Now, there's a whole process to this, and it's free. It's open to all. You'll need to have Bookmap to journal, of course. You can apply directly here. There's no cost to this. You can be using Bookmap's free version if you wanted, but there's a process to what you go through here. So if you join the Academy, basically you are an applicant and you start journaling and then you get feedback. You start to post in the Bookmap Academy room here in Discord, and you get good at that. You make a quantitative and a qualitative threshold of just one per day, one journaling or trade markup, and looking for good stuff, good content. And if you do that, you'll be invited to the Bookmap Junior Academy. At that point, it's a testing ground. So all you have to do is continue on with the process, and you will be invited to the Bookmap Academy. In the Bookmap Academy, you can get Bookmap for free. You can also, if you double the quota of 2 journalings per day or trade markups, you can also get the stops and icebergs indicator free of charge. All right, so we're giving back, you're giving, we're giving back. You take it further, you can become a Bookmap coach, and you can also get data for free on top of what we just talked about. And you will turn around and give feedback to some of the Junior Academy members and some of the Bookmap applicants. Okay, that's the process. You can take it further. Tom B, Doug have become Bookmap streamers through the Academy. And saying that, actually, all next week, we're having the Bookmap Coaches Academy Pro Trader webinar series. So coaches, Jack will be, I think you go on Monday, or is it Monday or Tuesday? I think Monday. We have Moby going on Tuesday, and some of the others are presenting later in the week. Okay, so listen to the coaches, listen to what they have to say, the way that they use Bookmap and the way that they read order flow to gain insight. All right, there's other things that I do want to cover here quickly in the slides, but that's the introduction to the Academy if you guys are new in here. Well, we have onboarding events every 3 times a week. So we're just trying to, this is a very simple webinar, trying to get you up and running with Bookmap. So if you have questions, if you're confused, you don't know where to download the program and install it, how to connect it to data, we're here for you. Mondays, Dan's there for you at 8 a.m., Brandon at 4 p.m. Wednesdays, and then I'll be there Friday at 1 p.m. So around the globe, wherever you are, we should be able to get you connected and up and running with Bookmap. We're also having this Trading Companions competition going on. Trading is a lonely business, so if you're out there and you're trading all day and have a pet that's near you and it really adds a lot, take a photo. Then on Instagram, LinkedIn, or X, just post it with hashtag BookmapPets, and you'll enter into the competition immediately. And then one more thing is the Bruce's pilot program. So this is something we put together just to really, it's kind of a subsector of the Academy. The whole goal here is to get people to trade much better. And after seeing so many traders and talking to so many traders over the years, the biggest gap that I've seen is that they don't have an edge. They don't have any edge at all. I mean, like, if they know something is working now, it doesn't have to be like, quantifiable, like, to the tick type of thing. They just don't know if they have any advantage. So they listen to gurus, YouTube webinars, or whatever it might be. Try this setup. Maybe it works a little bit. Maybe it loses them a lot of money. They try another one, and they go around and around and around. Okay, we have a process here using Bookmap's replay mode, as well as our trading journal, so that you can build the confidence to have an edge and trade. We have a very simple setup we go through. Everything is simplified. We try to take all the noise out so that you can focus on one thing and get really good at it, and start to build some money and an edge in your trading. Okay, that's what this pilot program is about. I'll put the link in here for you. So if you want to join that, it's free. You will need to have Bookmap Global or Global Plus, though. All right. Okay. And then our process in here for the Bookmap Academy: journaling, building out your playbook. We go through this slide in the All Markets webinar, as well as during this academy. We have 4 items here. Impetus: what's moving the market? You should know that. And what are your key levels? You should know them on a higher time frame. Where do you think there's going to be reaction from other traders in the market? And then you start to build out your scenarios and your strategies. You can start to draw it out. In fact, price is going to come down to this key level. I'm looking for this, or I'm looking for that. Then, based off of all of that, you come up with your setup. What are you going to trade? You select it. You look at your checklist. You should know your setup. You should know it intimately, so that you can grade it. You can determine your sizing. Then you wait for that order flow event and that edge in Bookmap. You take it and manage your trade. Okay, so that's the process we go through in here. A couple disclosures, then we'll jump in. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so let's jump in here and coaches, let's see who is in here and in the room, and who we might be able to cover and invite up here on the mic. Let's see, Jack, I think you've got some new traders, right? Or a new trader?
I have Brian C, and then I have Laura, obviously.
Okay.
Those are the 2 that I have. I don't see Brian here. I do see Laura, of course.
Okay. Well, why don't we start off with Laura then? It's actually been a while with Laura, so we'll start with her, and
she's on the second half of my Notion file.
Yeah. And Laura's
Brian at the top. We just scroll down.
She's been doing fantastic work, learning a ton, and here it is. Here, this is part of the pilot program. Yep. So take it away, Jack, and let's invite her up. Well, oh yeah, Laura doesn't like speaking, so Laura will have you in the chat.
Laura is a non-native English speaker, so I believe it's German is her natural language, but she can speak more than one language. So generally, what I'll do, actually, let me go ahead and copy this to Laura in the Discord here. Real quick, 1 second. Sorry about that, guys. And she'll translate this to make sure that she's reading it properly and stuff. So anyway, what we got here is the first image here is an overview essentially of what she's looking at. Now you'll notice right off the bat, she's got several lines that are kind of trending off in one direction, trend lines essentially. They're essentially rays. So they go off and on and on and on forever, right? Now trend line strategies are great. Basically, when you're looking at VWAP, that's essentially a trend line strategy. Momentum strategies, when you get in something that's just kind of taking off, that's a trend strategy as well. These are fantastic strategies to kind of leverage. I'm a big fan of them. I've talked about them in different topics of like macro and micro trends and things like that. But there's a couple of observations here that I want to point out. You're keeping track of multiple vectors here, or lines, if you want to call them that. And you have a higher time frame one. So it's that main one down there at the bottom there, Bruce, if you can kind of highlight that. That's kind of like your main longer time frame trend line. But then you have that newer one that's more of a spike up that's in that red circle there, right? But you're coloring them the same. And I think that in general, you want to try to isolate those visually. And this is just kind of a suggestion, because when you look at your chart, you want to be able to instantly know when something's different or when it's breaking in a different direction, because the market will move very quickly sometimes. And this will help keep you separated there. And then kind of if we go to the next image, the next image there. So it looks like you're trying to catch a reversal, and kind of based on the previous ones, it was the same. So one of the differences here, you're not playing a trend line strategy as opposed to like trying to anticipate a reversal. That is very, very difficult, right? Because when you're trying to anticipate a reversal, that means you're on the wrong side of a trade typically. When you want to do those, you want to have very significant key levels, which you identify here. And then you also want to stack in order flow and some sort of liquidity phenomena or something that drives you in that direction. Now, typically you would use the trend itself to drive you in that direction. So once you break the line you're looking to enter, but it's difficult to understand exactly where you're looking here. So I would clarify that. And then the second thing is obviously make sure you're not anticipating the reversal too early. Don't jump in and try to short it and top tick it, because you'll generally lose money. The market typically goes up. You don't typically want to short momentum, essentially. So those are the two areas looking here that I would really, really focus on. And then third, you moved your take profit. There's nothing wrong with moving your take profit, but I don't see any order flow or any type of mechanical reason for you to move your take profit here, other than you might have wanted more profit. Now, you're going to VPOC, but VPOC didn't move, right? So did you just not set it initially and you finally got stable and then now you moved it? Or did you move it because you wanted more profit? These are the kinds of things that you need to make sure you're journaling, because when you come back to this trade in a couple of weeks, like you might not remember why you moved it, even though it was only a month ago, right? So make sure you have some of this information written down. And that's one of the most important things about the journaling process, is understanding where your decisions were at that time and giving yourself a review. So when you come back and review it, like, oh, I made this decision before and it worked amazingly. So let's look into this a little further. And it'll help you continue to evolve your process. Kind of like Bruce is talking about, you take one thing, get good at it, and then expand from there. Little baby steps over and over and over again. So it's the exact same concepts in the pilot program that we're talking about here. So those are the key elements I had for Laura. But yeah, Bruce, what do you got?
So let me first start off with the process here, Jack, because you might not be too familiar with it. Is with the pilot program, we took one of the supply and demand here. Let me show you one of the supply and demand courses here, setups, and then just focused on just that. And there's only really 4 main elements in the setup. And then just get really good at those. So like, here is passive accumulation. And then a key level, like in this case, it was 21,000. It was also, there was some resistance or support there. And then we're looking for a break of that structure, okay, which would be, it could be a trend. I mean, we say trend line, but it could also be horizontal line, a break of structure. And then we're looking for the aggressive accumulation for
Yeah.
buyers to start to come in. And then we
Yeah,
have our
same
targets.
concept. Yeah. And if you look at hers, her entry is at, essentially well before you would typically have it. It hasn't really broken back the key level. It hasn't broken any of the trend lines that she's currently looking at. This is just an incredibly aggressive entry. Like it's still like, I get the trend line accumulation. This is a standard trend line pattern, but this is a very, very aggressive entry because you haven't broke any of your trend lines. You haven't broke any of your mechanical events that you would use to start triggering a reversal pattern or a continuation pattern.
Yeah, no, I'm with you on that. I mean, like this is Laura. This is actually some feedback I wanted to give to you as well on this. Was because I mean, this is massive passive accumulation, which is great. I mean, you really
this is a big position. This is great.
You nailed it there. And this was the same kind of to Doosman as well, kind of feedback of like, okay, it's a nuance. And Laura, you've been in this program for quite a while with the nuances, so you understand them. And that doesn't, I don't know, it doesn't bother me so much then because you've put the time in and you know what you're looking for. And
definitely has put the time in for sure.
Yeah, and the effort and like and you've gotten really good at it. So nuances. Maybe this is one of them. But it would be good to hear from you to kind of address some of the feedback here, so we can kind of get a
usually
better
she'll
feel.
message me.
Okay.
Usually she'll message me and then I kind of add it to the next feedback whenever I get her again. But yeah, so she's got a circle right there above that kind of upper pink line, right below the entry there. That honestly is like the greatest part to entry, right below that, the bigger circle there. That when you're starting to break that trend right there, right? Like that's signaling to me that you really want to try to get in, and you still get a little bit of time there. It looks like you get almost a minute or two where you're just kind of chopping around there before you get that continuation. That to me is where you're like trend line break accumulation and then like reversal pattern sets up. Like that's your key level. And then you nailed the exit. And I don't have a problem with where your exit target was, but like, why'd you move your target? And a lot of times the answer is literally like when you start your entry, like it has a fixed profit and then you move it at some point in the future. And that might be the answer here, but just make sure that like that is the answer because somebody looking at it doesn't necessarily know, if that makes sense.
Yeah, Laura, it'd be good to hear if you can write about why you moved your take profit around. Also, just again, kind of feedback to Doosman and Laura about the nuances and is just as long as you aren't getting confused, like Jack says, there's a lot of momentum here. Okay, there's tons of accumulation passively. Do we see that transition down here unfold? Not really. I mean, like maybe in here, like what Jack was pointing to here, it starts to maybe in here it kind of confirms it. So it's a little, it is very aggressive and it's a little odd, but boy, you sure nailed it. That's for sure.
Yeah, you got a great trade. One of the best things about like where your current lines are too, these are great areas to potentially scale in and scale out of. I remember last time we chatted, that was something that you were working on as well. And you can see how you obviously drew your lines before the market got to there. And you can see that at those levels where your lines ended, you do have a little bit of consolidation right below. It shows that those are very good potential take profit lines or scaling lines or areas where you want to kind of modify your risk at that point, right? Where you want to add or remove risk, it's up to you, but you can see you get exactly what you want there. You get trading activity right where your lines are intersecting price. So really good stuff. Like you're nailing the trend lines perfectly. So that's what you should be seeing.
Yeah, I see she's writing, so we'll get an answer here. Hey, in the meantime, we've got John in here. and some of the other Bookmap pilot program guys, I would like to invite you guys up to give some feedback as well, if you're game for that. So let's see, Shark, DNT, Trading His Life. Is Trading His Life in here? No, he's not. He usually comes in a little later. Yeah, anyway, what do you have to say, John? I think you had mentioned also you kind of looked at like this as being more of a conviction in the trade.
Exactly.
Yeah.
Yeah, I think that would have been the key confirmation. But she does draw lovely trend lines.
Right?
I think for the first element of this process, I think everyone should copy this chart. I think
Yeah,
this is
it's
the
a
model.
good chart, right?
Yes.
The way those trend lines line up with that
Hey,
price
those
action
trend lines, they're
expectation.
lovely. I have a weakness when it comes to trend lines, so I did this myself. I copied this out, and I have it on my desk as just a guide to how to draw trend lines. And I love your suggestion, Jack. I think that's right. Is to make the colors a little different so you can know exactly where they originate from. But this is a lovely chart, really good. And
Yeah.
she does it all the time.
And the biggest reason I feel, especially that longer time frame one, like maybe you have the shorter time frame ones like all one color, but you have that longer time frame one, a very distinct color. And the reason I feel that way is because how many times have we been on the wrong side of a trade because we think we're going one direction, but like we're not with the real trend, right? And I feel like just being able to always take a step back and visually see it clearly is key.
Yeah. And the way she draws them, she's getting ready. She's in tune with the flow of the market. And so it allows her to be ready for when the key trend line breaks. I think she does a great job. Yes.
Yeah, it's great.
Yeah, let's jump back to the bigger picture for just a minute here. This was on the 28th of August. We have
my feedback here was for initially was just it's very difficult to see what she was doing in the two previous trades. And I wanted to make sure she either swapped her bias there, which this is in her notion, whether she swapped to a short bias, or if she was short on those two previous trades, why was she short, right? Because in her trend line pattern, you want to wait for that kind of accumulation for the break and then the entry, right? So it kind of led into the conversation of maybe don't make too aggressive an entry. So, but it was tough to tell. And those weren't part of her shared trade, but it was just kind of like, oh, by the way, just keep an eye on this kind of stuff. But yeah, what were you saying, Bruce?
Yeah, I mean, just about the aggressiveness of it. I mean, the bigger picture looks just beautiful too. I think. I mean, look at all this liquidity above the. Obviously, this is 830 cash, or you say it's the regular open, but yeah, I guess that is it. Look at the move to the upside, the move to the downside, and then just massive liquidity up here. It busts above the swing high for the day. And then it sells off pretty hard, and you grabbed it. The only thing is Laura, about the pilot program, is about the aggressiveness, and what Jack is mentioning here is just don't get confused. If you should know what you're doing, or that it has higher probability of working out. Instead of trying to catch that falling knife, let it confirm.
Yeah.
Okay, you didn't even get a chance for a pullback on this. It came up, did a little double top, and then look at this move to the downside. I mean, there's only one little wiggle in here really, and maybe a bit down here, but that's pretty dramatic. It
was a big move.
Yeah, and you freaking nailed it. Anyway, it looks like you were just getting in front of the POC and V. And where's your view? Oh, your view app is down here.
It's the same. It's the same area.
Yeah.
I mean, it ended up being an absolutely perfect exit, right? She said the reason was she moved her order down was because the initial take profit was just a bracket order, which is
Yeah.
what I expected.
Yeah.
And then she moved it to where she saw the aggression. She was in trend. She was just comfortable with, more profit, which is great. That's great. It's just about notating that. And I know I haven't been around for about a month because of personal stuff, but I'm really big about the journal. So if you hear me talk in the academy, you're going to hear me mention the journal several times. And I believe in it. I really do. It's important stuff.
Yeah. Yeah. Okay. Shark, I don't know if you have any comments or questions or feedback.
I think I just agree with John. The trend lines are drawn perfectly. It's textbook Victor Sperandio's rule set, and I love the little fractal trend line at 3. I like the aggressive entry. It is extremely aggressive. I think in my case, as long as I know what I'm getting into and I'm ready to punch out, I think that aggressive of an entry is okay.
Yeah, fair enough. I mean, like, just as long, my only comment is like, just don't get confused. Don't let this confuse you and trip you up. So, I've seen others take this strategy here, and maybe they're not quite versed in it well, and then they're taking all sorts of trades where they're not fully baked yet, and then that leads to confusion. So that's what we're trying to avoid. So just keep it clean, clear, simple, but once you're kind of on your way, like I think Laura, like, you're okay with taking if it got stopped out here, you probably look for another one, for it to have more volume in it and see that transition unfold, or something. I don't know.
I think the point of confusion in these 4 criteria is just the key level. I think where we see the trades all over the place is it's missing number 1 on the checklist, key level.
Yeah, and I mean, clearly nailed
has
that
it.
one. Yeah, I mean, look at that. It is just beautiful.
That is a major point with reversals, is you need a level, because basically what you're getting when you're getting a reversal, right, essentially, is you're getting that push into whatever level that you've determined that's going to be the key, and then you're getting that trade interaction, and then you're using that interaction to leverage a directional move, right? And just if you're using support and resistance or cam or pivot lines like that, you would do the same thing, right? We were giving Veilfan his kind of coaching, a year and a half ago, was the same concept, right? Let it interact with your cam level, but leverage Bookmap, get your liquidity, understand you get sellers, which obviously in the other image, we can see all of those things. And that's where you get the kind of thing, right? And so that confusion can be very important. The other trader I covered today, Brian, he's using just a momentum trend strategy. And there's nothing wrong with those, but he's not leveraging any of the order flow phenomena or any of the things that Bookmap really excels at outside of initially seeing the order book, right? And it's great to be able to see the order book, but the power in Bookmap is seeing the order flow, is seeing the interactions at your timelines, whether that's 10-minute timelines or 5 minutes, or you're looking, in market microstructure, right? So just getting whatever you need and seeing that liquidity and seeing that order flow is so important. But yeah, I totally agree. The key level is a very major concern with trendline setups, for sure, in my opinion.
All right. I don't D&T. I don't know if you had anything you wanted to add.
Not really. I was basically just same thing that they just said now. And this is something that in the pilot program I just mentioned it last night, actually. Because a lot of, she had 3 trend lines here, right? So this thing was like pretty overextended at this point. So that aggressive entry, yeah, I could see that aggressive entry because it was pretty overextended. What happens sometimes is the reason we don't really want to enter that aggressively a lot of the time is because well, obviously the momentum everybody just mentions, but sometimes it makes that extra move to the a little bit further to the downside or the upside or whatever it is. It's kind of like I was mentioning this last night with Sashin, I think, and yeah, sometimes it just makes that move. And just like kind of like this morning, I don't know if you guys watched the cash open this morning. It was something similar where we kind of balanced for a while, and then it made a strong move down, and then it reversed really sharply again. So it's like, yeah, sometimes it does that. And when we're fading a move, you don't know, you got to be cognizant of what you're fading. You could be fading like strong momentum into a higher time frame level, or you trying to fade just like an intraday like balance, and
Yeah.
sometimes it's like, so it's just be cognizant of kind of like what we're fading here. And when we're transitioning from these like replays into forward testing, that's where it becomes even more important to be aware and cognizant of like what you're trying to fade here, because you could be in a higher time frame, trend, and you think that it's just an intraday, that you're trying to just fade an intraday balance or something, but you're not. You're trying to, and you keep entering and entering and entering. So, and like today, I was trying to fade the move down, trying to go up. And, I entered too early. I got caught in the trap, and then I took a stop, and then I tried it again, and I took another stop. And that's the thing that we're actually trying to avoid by not entering early is getting
Yeah,
that.
exactly.
Yeah. So so that transition, I think, to forward testing, from replay to forward testing is it's really important. Everything that Jack just mentioned is really important in the forward testing. It's really, and then doing your prep work and finding those higher time frame levels is important, is important as well. Like, and we all know why, because we could be just trying to fade this thing, and it could even move through the higher time frame level and then pull back to it.
Yeah, and also think about it, like, so let's say where she entered, right? And it is an aggressive entry, but I make aggressive entries too. So like I don't fault an aggressive entry. I just notate it. But let's say we get a break higher, right? And it breaks that liquidity. What's going to end up happening is you're going to get potentially a stop run, because a lot of people are basically stopped right above it, right? Because that's a key level. There's trading interaction. That's the whole point of the level that you've chosen. Now it's not going to hurt because your stop's there, so you're going to get out for the most part, but that kind of lends credence to you're going to get a big move off that level if it broke through because of a potential stop. You see that in the stops and icebergs, and then you get that low liquidity imbalance to the other side, and you get a good sharp reversal, right? So, and a lot of people call that stop runs or similar. So
Yeah. I mean, I think, Laura, this is another thing. I mean, you got this stop run here, and above a key level. I mean, tremendous amount of passive accumulation, and just to comment on, yeah, you can change the colors of your trend line, no problem. It's kind of cumbersome, as you know, but yeah, you can do it though. Anyway,
yeah, I would only keep the long one at whatever your dominant color is, and then whatever color you use,
Yes.
like secondary.
Yeah.
Do the rest though. Yeah, you only need to change one.
Yes.
all right. So let's move on, and let's see who else is in.
So we got Doosman, I saw on the coaches list. I believe Steven was on the coaches list.
Yeah. Let's see.
And I closed the coaches list, so now I can't read it.
Let's see here. Doosman. It might be a good transition into Doosman. In a minute.
Oh, John was too. He was covered by Moby though. I don't think Moby's here. No, Moby's not here.
So Doosman, this was something that you took. This is replay, August 7th here. So why don't we? I don't think we covered this one with you before. And this was a recent post though yesterday. And you've got a couple more as well. How you managed it, etc. Yeah, why don't we?
Are there more images of this particular trade?
There is. So let me bring it up here. And I just lost access to my quite a while ago to Notion. Okay. All right. And Doosman, I know that you I'll invite you to the stage here. I know that you just attended the where are you? Oh, you're up.
Yeah,
Okay.
I'm right here.
Okay. I know you just attended the Axia Futures Bogdan Stoichescu webinar. Man, I think that was really good. Really, I really liked it. And also we had a pilot program meeting just the other day. So a lot of feedback to you. So why don't you go ahead, take the stage here and walk us through the trade.
Yeah, for sure. To speak on the webinar earlier, it was great to hear that there were many different avenues in terms of the type of character you can be when it comes to trading. So it is something to consider and pick the proper one that I feel like will fit for me. Now, in terms of this trade, I was just trying to see the different ways I could manage the trade and how I would feel about that and which one would make the most sense in the skill level that I have right now. And this what's it called? The trade you're seeing right now, I think is the best trade for me at the moment. But overall, I was just trying to see how can I get the most out of this trade without breaking any of the rules and also being as comfortable as I can be.
Okay, so then you broke from the trend line break and accumulation, kind of.
Okay.
Yeah, it's a little late. It's more of a continuation.
Yeah.
Okay.
But it's there. The pattern is there.
Yeah, I mean
Well,
the trend line break and structure break is here. But you got in here. So this is more of like it broke, the structure is trending, here's the flag, got in and you took it back up to measured move up to where it broke from.
You basically, what I would say is you got a great re-entry.
Okay.
And there's nothing wrong with that. Like you said, so based on what you said when you first started, meaning you came in and you're kind of not tepid's not the right word. Cautious is probably a better word. You're efficient. You're trying to find something that's isolated and works for you, which is great. There's nothing wrong with that. And this is just, honestly, it's a slightly more advanced, it's a secondary version of the trendline break, right? Because it's looking at the next step of it, and that's essentially another entry that you can continue to leverage with another trade. But it's not a bad trade, so definitely don't take that badly.
Yeah, no worries.
It's actually a harder trade.
All right. Well, personally, the reason why I waited this long was to see more aggression overall. I didn't notice that doing so would have broken the rules, but it's good to know. It's great to know. Thank you.
So in my opinion, just looking at the chart here, I would like to see you zoom in on 1415 and 1430 in your journal. That right there, where Bruce's literal pencil is, there's order flow right there. You see it in the reaction and the volume below. Somebody's calling me. I'll have to step out for a second.
No worries.
Yeah, Doosman, it kind of worries me a little bit, I have to say, that I think if you're jumping around, you might get confused. and you're trying to get something that, you know, works with you. Like I mean, you can choose any kind of strategy you want. I mean, we chose the trendline break and accumulation for a reason, just because to understand exactly what you have written up here is to understand all of this passive accumulation, okay, and then a structural break, and then aggressive accumulation at a key level. So once you've got those things, you can start to look for you know, taking profits at liquidity levels as well as swings. And the continuation is something that I would love to add into as the next strategy for people. I mean, basically, you can kind of see the same thing here. That you know, here's your break, and then here's your accumulation here. So it's the same thing. You're just not going to, you're going to see it as a continuation. You might get exhaustion here. You might get some accumulation passively, but likely, you know, a lot less. And you know, now you're leaning on, you know, I mean, yeah, you're leaning on still the same thing over here, all of this passive accumulation. And anyway, just those are some of the nuances, and I'll
So in your continuation, where Bruce had his lines essentially just a second ago, you'll see where your entry is, and then that lower level liquidity band there at like 63.35, I think that is. That's right below that is probably where your best stop is going to be in general. And that gives you that room for that liquidity to be basically your anchor, because that's where you've had your last significant interaction of price, right? And then you're basically allowing those participants to essentially be your backstop, and then you're just sitting right behind them essentially. Now, like we mentioned before with Laura, right, if you get a break past that, you're going to get potentially a stop run and an imbalance, but that's really tough to do because you got to break through all of that liquidity, right? It's going to absorb to some degree. So that's kind of where I would look for more of a stop. I would just move yours just a little bit lower. And again, that's leveraging Bookmap for that liquidity element in the order flow, right? Is you can see these a little bit clearer, so you can really see where market participants are, and you can use them to front run or support you essentially. So it's good stuff though. This is a great trade. I would really go back through this replay, Doosman, and I would really look at the order flow that you've identified here, and I would start expanding out those timelines a little bit, because you've isolated something in your replay and you've seen it. So now break it down and expand it a little bit more, because you've got a great example, right? So start fleshing it out a little bit more. It's kind of like if you were working a long division problem, right? Like, yeah, you know, you got the right answer now. So let's start working through the steps and making sure that we can carry the 1 and zeros or zeros and stuff like that, right? But that makes sense.
Yeah,
But great
no,
problem.
yeah. Thank you. Just real quick, I was thinking in terms of the volume bars, I wanted to see a clear shift in their size relative to everything I was seeing before. Now,
Yeah.
if I see the buyers coming in relatively the same as the sellers that were approaching before, would that be enough accumulation for me to take a long there confidently?
So what I would look for, and you can kind of see it here a little bit more, it's that first 3 arrow. You're noticing that, yes, while the magnitude of the buying versus selling is similar, what you're looking at in that microcosm is that there's an absence of selling, right? Like all of a sudden we get to that level and then sellers just aren't to be found. And when there is no selling, right, then there's only one aggressor, and that's the buyer essentially, right? Or we have no move.
Yeah.
Now, the second 3 you have is where you do get your critical area, but for that one, that would have been, you would have needed to take essentially a second entry there or a continuation entry from the initial trend line accumulation setup, right? So
Mhm.
the initial entry was more around that first three, but if you wanted a second entry or continuation or a scaled entry, you could do the second three. And then the pullback, the better and more consistent second entry is actually the entry you made. So that's where I would classify those three.
Mhm.
And I've kind of been consistent classifying those three with Bookmap stuff. So I have some images I think that I can pull up and show you.
Yeah,
So
that
I'll
would be
get this
great.
to
Yeah.
you. Yeah, this is great stuff though. You really did a good job. You're ahead of where you were trying to be.
All right, well, I got to step it back then. No problem. I'll
Yeah,
try.
yeah. You were asked to draw a sun and you drew an entire picnic, which is great. Nothing wrong with it.
See, I don't know who next here. I don't know, Shark or John, DNT. Why don't we start with Shark? Or John, go ahead. I see you were just about to speak.
No worries. I like his decision. I like his trade. I could see myself doing the same thing. And that's because of that volume spike. Up until that point, I don't see really a transition from down to up based on the size of the volume dots coming down. And then in the transition area where he has mark number 4, and the dots aren't that much bigger, the volume bars are not really spiking up. It wasn't until he got the volume spike that he very nicely waited for a little bit of a pullback, and then he got long. I love it.
Yeah,
I
it's
think
a
he
great
did
it's
good
a great
job.
second entry setup.
Yeah.
Um,
I'm just not
Yeah.
seeing the first entry is what I'm saying,
the
because
first entry to me, it's the difference in there is no selling. It's just gone, right? They've reached the level and they're like, okay, we're good. We're not here anymore.
yeah. Okay.
So it's essentially exhaustion.
Mhm.
And that's what really starts kickstarting some of those things. And we see that a lot. And you'll see
Mhm.
a lot of these in Stephen, resistance turns into support. Exactly. Those kinds of things. And you'll see a lot of these, especially when you start breaking this one out, Doosman. You'll start seeing, like, as you go into just those bars, you'll just see like sellers drop off. And then if you look at another example, you'll see the kind of consistency. But notate what John's saying too. Like, if you're looking for strong volume in the direction you want to go for your
Mhm.
entry,
Mhm.
he's exactly right, which is why that's a great second entry.
Okay.
I got it, guys. Thank you. It's at the end of the day, I am trying to do the trend line break trade, and I'll be looking for this later on. If it's something to wipe off the
For sure.
memory, then that's what it is.
I wouldn't wipe it off the memory. You identified
okay.
a great overall
Okay.
trade. You really did. I would break into the area where you have 1, 2, 3, 4 marked and just zoom in a
Mhm.
little bit, but you did perfect overall, man.
Yep. Sure did.
Okay. Yeah, thank you, guys.
Okay, let's see here. Actually, there was a couple more after. So it looks like you wrote it up. Kind of moved your stop a little bit here. You probably would have gotten stopped out there, but and then wrote it up into high even above the high liquidity in here, which is kind of curious in here. So it broke out from all that high liquidity here. This is great though, Doosman, that you're doing this in the replay mode, and I see you're doing it in 32 times market speed. This is how to build your reps. You know, this is great. Well, I mean, you can slow it down, you can speed it up, you can use
True, absolutely.
You can use the space bar to pause. You can use the comma to slow down. You can use the period to speed up. So like it's really flexible. And then you can just trade it again. And yeah, you know, continue on and maybe look at it again. I mean, I think the comment.
I'm actually going to go pull that day up because I thought that was a really good example overall.
Yeah. So anyway, let's see. Yeah, and then it looks like finally you just hit market or flatten up here. High liquidity, and it comes up a little bit more, and you just hit flatten. So you got a lot out of it. And this probably came from, I I don't know how many trades, but you probably traded a bunch of times.
Yeah, a handful. That'd be about 5 at least.
Yeah.
Just give or take. We're not in terms of the entry. I practiced the entry about 5 times. The rest I managed as if I was in the trade.
Yeah. This is just beautiful to hear. I mean, I just think it's so helpful. I don't, if you have any kind of like comments on that, I think this is the way to go. Build those reps, trade it again, get better at it, start to understand context a little bit better. You know, so
Yeah, like I said, I'm gonna pull this day up and I'm gonna take a look at it because I think that this is an overall great look at things. I want to break it out a little bit, and it's a really good example. Honestly, is.
yeah. Okay. All right. Let's see here, and we can.
And I just wanted to say, I remember you told me, Bruce, the same thing, that's actually isn't really the trade, and I didn't really understand it for a long time. Remember?
Yeah. Yeah.
I kept posting these same things, and you're like, you didn't. I didn't really understand until you kind of told me that the pullback really isn't the trade, and I do see the same thing, Doosman. So you're not alone, and I'm sure there's a lot of people in the same boat. But
we kind of lost your mic. Bad connection, DNT.
okay, can you hear me now?
Yeah, you're back.
Sorry, I got a phone call. And yeah, no, Doosman, I was doing the same thing. So I was the trade is actually where Bruce and Jack just kind of mentioned, and the little pullback, the little micro pullback that you see where the little red bubbles are, from what I understand, is also the trade as well. So like you're looking to trade that, like the impulse out. It's not really like, the right, it might not be like the term that we would all use or anything like that, but we're looking to trade that break of structure and that pull out of the trend line down. And I didn't really understand that either for a long time. And I was always trading that pullback like you took here. And, from my experience, like what I've learned is, that pullback that you actually took that long on is good. But you can get stopped out on that too. So like what I've noticed is if you're trying to fade like a strong momentum move or like a higher time frame, or let's say the level that you're executing on isn't really like quite like a higher time frame level or something like that, well, that pullback you won't get that. Like that will fail. Bruce mentions all the time in his webinars, and you probably heard him say where it just kind of gets that. What do you say, Bruce? It's kind of like a head and shoulders or something, or it's like a failure, right?
So like this turns into the shoulder. You get one more push down lower, turns into the head, and you get even more volume starting to come back in, aggressive volume, and then you get a pullback, and you get a higher low, and then I think, is that what you mean, DNT?
Something like that. Like that move where he entered could actually be like that could be a failure. So if like you're executing on like a level that might not be like a higher time frame level, well, that second pullback won't really hold. Like Doosman, you traded the 5th, right? Of this month. Do you remember that, where it was kind of like a trend down and we were like trying to fade it, like we were trying to take longs? I remember we talked about it, I think last webinar, where it was just like a strong trend down and like we were trying to fade it or something, and like, but we wouldn't get that move, just like a strong move up. You'd get like a single. You would only be able to get like a single. But see, if you re-entered again on this pullback right here, for instance, that would have been a loss, So like when you're trying to, like, this will work if like the reversal's strong. Is the pullback will work if like the reversal's strong, is kind of like what I'm trying to say.
Yeah,
If
yeah,
that
no,
makes sense.
I get it. Yeah.
Yeah, so
I don't,
like
I don't remember fighting, but sorry, go on.
Yeah, you spotted something good, something that I looked at as well, and you'll notice this pullback happen sometimes if the reversal is like a true reversal, and that pullback will hold. But sometimes if you're trying to fade a trend or something like that, or a higher time frame move, then that won't hold up. So
Yeah,
just
so
you'll see it.
The entry
All
you
right.
ended up taking is one I document as a macro micro impulse. So you get the macro
Mhm.
move down initially, then you get the micro impulse, which is probably where you got the impulse, because I think I remember telling you about this. And then from there, you're waiting for a resolution. So the pushback again is the resolution for the initial macro trend, and then you're off to the races for your micro trend. So I can write it up a little bit better, but it's the same concept. And really, if you want to really isolate the trend line situation, you really want to just zoom in your time frame around that 4 on your chart here, okay? And then that's where you're looking for your order flow and for your release point. So where you're looking for the market price action to signal that we're no longer pushing down. So from there, you'll be able to see the volume bars and get some of that isolation and understand the order flow there. And lack of sellers amplifies buyers, right? So that first 3, we don't see any sellers there, but just to the left of that at 14.15, you see a bunch of selling volume, right? But remember, it shows you whatever the bulk of things are. So there's just a lot of selling volume there, but you don't know how much buying goes essentially there with these bars. So when there's no selling volume, that tells you something all on its own. So just make sure you have that. But once you zoom in there, you'll really be able to isolate that trend line break for that particular setting. And then still continue watching your particular entry here, because again, like John and I have mentioned, and now DMT's mentioned, you do have an entry here. It's just a little bit more advanced. So just keep it in your mind so you can keep learning off of it, right? You don't necessarily have to trade it if you don't want to, but say, oh, I think that this would be a good long here, and then write it up and then watch it. And then that's the best way to do things. So you're doing great. But I got to jet. I got to
Thank
go
you.
dad it up a little bit. It's
Okay.
great seeing everybody.
All right. Thanks,
Take
Jack.
care. Just one thing on what Jack was saying, just really quick. The problem I was having earlier is when I did zoom into the aggressive accumulation, I kind of lost sight of the rest of the move. Is there a middle ground that you guys would recommend in terms of zooming in?
Well, this is a really good question. Again, context is what you want. So in the bigger picture, the context is like this accumulation here. Was it powerful? Because this is what sets up the reversal and the trade, is understanding like that. First off, there's this selling is hitting buyers. And they're getting absorbed. Now, the other question is, are you at a key level, right? And then the next question is, do you break structure? Okay, and you can even see this little structure broken here, and this exactly where the pullbacks came to retest this to see if there's still more buyers or sellers after this kind of small move to the upside. So it's understanding this context in here. Now, I mean, this volume just got completely blown out here at the close. Really super strong close, unbelievable. Anyway, I hope that answers your question or helps.
Yeah, it was great. Appreciate it. Thank you.
Guys, any
It's a
other
great
questions?
response.
Any other comments, questions? I don't know, Shark, John, DNT.
That was a great response, Bruce. Bringing it back to the playbook, right?
Well, I think, I mean,
Kind of.
it's so hard to, and I don't want to pigeonhole everybody into a very specific. I mean, especially you, Doosman. You in the pilot program meeting the other day, you had extremely precise questions, and we tried to answer them as best we can, but it's like this, coming back in and just hitting it with the big, swath of like, it's context. I don't know if that's helpful or not, but it's actually true. So you want to get a feel for it. You want to get a feel for the key levels. Like Shark had said, like, the key level is critical. And then because we know there's going to be a reaction around those levels. Now we want to bank on the idea in the setup, which actually, who cares? Like the setup, it doesn't really matter. It's understanding this concept of there are buyers here. They're getting filled at a key level. Okay. Do we still see more supply come in, aggressive supply, and does it drive lower? If it doesn't, and you start to see the some back and forth in here, and then the structure breaks, and then you see aggressive accumulation, okay, which you point out, and now you're seeing the reversal unfold, and it's those elements. Understand that in context will, I think, be extremely helpful for just about any other setup. I firmly believe that. That's why I kind of chose this, because the next one, this will be a variation of it right here. You don't see too much passive accumulation, right? You're going to see more exhaustion here. There's not going to be too many interested sellers. Wait for the buyers, trade it back up, maybe take some off, trade it back up. And you got a beautiful target up here. So anyway, I hope that helps get across just these concepts of it and work with it and understand that context.
Yeah, they're all great answers. All the questions that I asked, they've been answered to the fullest. So there's no worries, at least in my case, when it comes to that. So thank you. But yeah, I'll keep up with the setup, and we'll all go well. I'm pretty sure.
Great. I mean, what really helped me today was hearing Bogdan say pretty much the same thing. I was like, okay, I think we got it.
Yeah.
So anyway, guys, anything else like that you want to mention in here? Maybe anything, I don't know, about the close. If you guys have trades that, I mean, it's worthy mentioning for a possible study because this is the pilot program is a subsector of the Academy, Bookmap Academy. I mean, heck, this is looking pretty good. I don't know what happened after this day, but like with a close this strong and then it continues on up like this, I just can't imagine that we ended up way higher the next morning or London Open basically. And then maybe even U.S. Open, and that's something to take a look at. But anyway,
I'll just say super briefly, fantastic job of trailing your protective stop order below the previous pivot lows, because that's to me that's the way to take advantage of the price movement. It's clear as day, and when she rolls over on you, you're out of the trade and you're left with your profit. So good job.
Yeah, thank you.
That's a great point.
Yeah, really, really nice comment, Shark.
That's a good point. In this market, my goodness, trading safely is essential. That's an outstanding point. Yes, sir.
Yeah, that's a really, really great comment, Shark. Thank you. And again, I think Doosman, like you said, you traded this like 5 times, right?
Yeah, we're taking.
I mean, I just can't help but think this, will allow you to start to put that into context when it's forward testing and live testing, or live trading. Of now you've got the muscle memory. This is a good thing. It's you're looking for this. I'm going to move my stop below the swings. It should work. If it doesn't, I'm out. Anyway, you're building up that muscle memory in here. Okay, well, I think we beat this one to death. Unless if you guys have any other comments. No. Okay. Let's see. But way to go, Doosman. It's really fantastic. You're diving head first into this stuff and asking lots of questions. So Brian C, we still don't see him in here, and he's looking at quite a bit of things in here. I think we'll wait until he comes in, and let's move on to, let's see a few others. And who's in the room here? We got John. Moby covered John, and then we have Greeny and DNT. So who wants to go first?
Do those guys first. They're working hard at it.
Okay. All right. We'll go over Greeny. We'll throw him in here, and come on up to the stage.
Hey guys, thank you for having me.
Hey, Greeny. So a lot going on here. And this is Vinny's file. So Vinny gave you some, always gives really good feedback in here with all of this checklist and, identifying things. Walk us through a little bit. Is it your mean reversion here?
Yeah. This was like a really trending day. It was an uptrend, a big uptrend after FOMC. And I was like using mean reversion just to enter these trades or the trend. I don't have the full image here, but if I would have, you can see that it was like, I don't know, maybe 1 hour uptrend, and we were outside of value area. So it was like really high probability that you should rather take long than short. So I saw this, that I had a sweep. You can see it on the left side in the pink, a big sweep into the liquidity. Then it turned back and created a really small range on the
I'm
really
sorry, the big sweep is over here into liquidity. Is that right?
Yeah.
Okay, gotcha.
Yeah.
Okay.
Yes. Then you can see the small range which was created there. And when I saw that we are leaving the range, I went into it with 5 contracts. When we were really breaking out of it, I added another 5 contracts. We absorbed the passive liquidity which were there. And then I was thinking that, oh, should I leave or should I stay in the trade? And I was waiting what will happen. And I saw that the level which the liquidity level which we broke above was holding. Then I was, okay, we are going for the main target. And I kept it I am currently practicing because Spark told me that I should focus more on staying in trades rather than just focusing on entries and scalping, I don't know, 12 or 16 ticks. So I was trying to do that. And I went for the upper target. And when I got there, I just took all the profits and went away from the trade. And I got something around, I don't know, maybe 10 points or something like that. That's for me a big target or really big trade. Because I use mostly, I don't know, up to 20 ticks, stop 5 points maybe, or something like that.
Yeah, wow.
So
wow. Great trade.
It's really, I really like this mean reversion, because the mean reversion you can use on trending market and even more in the balanced market. A lot of traders can't trade the balanced markets, and with practicing mean reversion, I got very good in balanced markets. I am actually worse in the trending markets. Someone in the chat was asking me some days ago that how could you not earn money in this big trend? And I was like, oh, I can trade balances.
Yeah. Well, it's really great to see you take. Whose comment was it to stay in longer, and instead of like the scalping? Because boy, I mean, you really did, and look what you gained, And this your target up here makes sense with what you're trading of the mean reversion. Anyway, I'm going to pass it on to let's see, John or Shark.
That was my comment, Bruce. And just to say, Greeny, I wasn't saying, always trade the trend or anything like that. I myself am a reversal trader, but when the market gives you that information and says it's go time, like kind of like Bogdan said today, that's go time. So fantastic job.
Yeah, thank you. I really understand you, but I couldn't make myself to stay in trade.
You
Never
did this
before.
time. You nailed 10 points.
Yeah. This time, yeah, but I never could before. So I really will keep practicing this, and I hope that also with some backtest, because this, for example, wasn't a backtested target, but I would like to improve it to that level that I really backtest, and I will have my probabilities on my side, and I will take only those trades. This is more like an practice, but
Yeah,
I hope I will improve.
it could be 1 in 20 trades or 1 in 50 trades or whatever, but when the market says go, jump in the pool. This is a fantastic trade. Good job.
Yeah, thank you very much. Thank you very much. I really appreciate that. Also, the advices which you gave me last session.
Weren't we talking last week and you were just trading like one contract?
No. I was trading I was trading some few contracts, small contracts, but always just I don't know, 4 ticks or not 4 ticks, 4 points or so. Really just close reversals around VPOC. Never like a bigger trade. I even if I had a like thought that it could go above my target, I didn't keep it. So I always closed it, and I am currently really trying to improve this because I know that with mean reversion I got really high win rate in these entries and so on, so I can go really quickly into break even around, I don't know, 12 or 16 ticks. I can go break even and just keep it. And I want to backtest those targets which are far away or further away and have some statistics on it and do it that way. And this way I will gain some confidence for holding my trades because I don't have this yet. I have my confidence in entering the trades because I was really practicing this mean reversion entries only for, I don't know, 3 months or 4 months or something like that. And currently, I think the next step will be to maximize the profits by taking or holding the trades longer.
Let's see, John, do you have any comments?
I do. The area where you were thinking about selling, but the level was holding. Do you plot volume bars, Greeny? At the bottom of the chart? And I know this is cut out, but when you run Bookmap, do you plot the volume bars at the bottom?
Yeah. I just sent you the full image into the chat.
Okay.
And you can look it there.
Okay.
You can actually, on the full chat, you can see also where the trade happened. It was like we were also at 1 hour balance at up.
Okay.
And we were out of the volume area high.
Okay.
So
Okay.
I
This
was
is much
like
better.
total bullish.
Okay. Yeah, and you can see, at that point of the decision that you made to hold on, you did have an imbalance of liquidity above versus below. And that's one element that I think that helps me to decide and make that decision that you were faced with there. That those liquidity levels were layered to the upside, whereas there wasn't the same kind of interest below the market, and that would help you to stay long, right?
Yeah, very good point. Very good point.
Yeah. Okay. Yeah, that's it. Very nice.
Thank you very much.
Yes, sir.
D&T, anything?
No, nothing. Looks good, Greeny. I remember we were talking last week, man. I mean, big difference in just a week, right?
Yeah, absolutely. I would I think through kind of a Socratic dialogue here, maybe go back and say, like, why do you think this one worked? Do you see anything in here that helped you hold this? What makes this one different compared to others?
For me, it's for now, it's always just about the entry. If I have a good entry, like here I really had, because I was on low volume node, on lower fractal, and also on higher fractal. And I had the big liquidity. You can see that big red liquidity above at maybe 18 or 17 or something like that. I saw that big liquidity there. And when I saw that we broke through 10 or something like 9-ish, which is the another, and
Yes.
we held it, that gave me actually the conviction that we could go for the another one.
Yes.
That was my that's why I mentioned there that I was thinking that maybe this is my target, and maybe we go below. If we would break below that level, I would cut it, because maintaining my capital is more worth it than going for profit. So that would break my trade, and I would just cut it. But it didn't, so I went for it, and I waited patiently to reach it, and it happened, fortunately.
Yeah. I mean, I would recommend to go through and kind of question that. I mean, there's some really nice things in here, I think, that could help you make this into more probable trade. And I know you look at a lot of numbers, but there's also a lot going on in the order flow. There's a transition in here with the buy volume above the sell volume as it broke that structure here on heavy volume. It broke above it. Kind of, you see a flip of the order book. It traded into there, flipped to the bid, and then again, like high volume, starting to pick up,
Yes.
gives you some really good. Question these things, look at them, and see. Is this something that helps you with your mean reversion to hold it longer or to find a good one? And I would say, like, on this one, you nailed it. I mean, 10 contracts, you saw a good one, and you held it. So way to go on that. Anything like that, and in fact, that's actually the kind of process that I always wanted to do in here when inviting people up to the stage, is like ask questions, let you explain, it due to time, or I don't know whatever, it just kind of turned into more kind of advice or something, but let you kind of work it out and figure it out. I mean, they're not all, or what will you do if it doesn't work so nicely like this? What if this up in here, and it did come back all the way back here, but it held, maybe it did that, and then it goes back up. Would you have?
I would. Sorry. I would be probably out, because I was how I drowned that level there. Where we broke above the liquidity level, which was at 10 or something like that, which you currently mentioned. I was really looking at it. If it breaks below it, I will end it. I will cut it. I will have, like, I don't know, maybe 7 ticks or something like that, but I will have another trade, or I will wait for another trade. This
Okay.
was like we broke above, and okay, if we stay below above, I will hold it. If we break below, I will cut it.
Yeah. Okay. Another thing too is to just consider, like, the longer you hold, obviously the more kind of movements there are going to be, and you are scalping up into an area and looking for that move to happen pretty quickly and getting out. That was your time frame. Well, on this time frame, you're going to get like wiggles and pullbacks and different moves, and so just how are you going to handle, and you just answered it, but like, consider how you're going to handle those other moves, the pullbacks, etc., and how are you going to take, well, how are you going to manage it, basically, and because now it's turning into something different than what you had before.
Yeah. It's really turning into something different, but I always like had these, I don't know, 12 or 16 ticks targets in min reversion in small time frame. So I would like to do it that way, that I will go for this small target, for example, with my 17 or 70% of contracts. Then I will take profit, and I will leave the rest, and we will see. I mostly, for example, if I have 12 ticks or 16 ticks stop, I just reduce it to 8 or 6 or something like this, right below my entry, and I will keep it going. Or this is my plan for now.
Okay.
Because I really fight with this, I really trade these small time frames, and it's it has a really high success rate, but when I keep holding, it falls down. So
Yeah.
I really need to find a balance. For now, maybe 70 to 30 or 80 to 20, which I will take and which I will hold. But I would like to really do it this way, that I get my good entry. I will take maybe for start 80% of my profit on some level or some VPOC or some first target, and will try to hold the rest.
Yeah.
Just to do some buffer so I can trade from it.
Okay. Anyway, just those were the kind of questions and comments. Guys, anything else that you want to mention here?
No.
Okay. All right, D&T, we'll move on to you. And let's see. So Coach Vinny, and take it away, D&T.
Oh,
It's pretty poor.
is it?
Oh, there you're back. You're back.
Is it better?
Yeah.
Okay. I think we did this one last week as well, or the week before, but I mean, not too much to say about this. Like this, what we were talking about earlier in the stream with Laura's image is basically like this. It's like my point, or Laura, like Jack brought up the point of like, aggressive entry, not waiting for the trend line to break. And this was the example that I kind of gave. It's kind of like a trap that we kind of mentioned in the past in these webinars a couple times, but we don't really call it. We don't really have like a name for it or anything. It's just like, but the point kind of is that you get this strong move down, and it kind of like it could keep going. It looks like it could break out, but it keeps going to like lower liquidity and lower liquidity. And we've covered this one before. It's and this was my 5th iteration on this one, and I remember
I
us
remember this
talking
one.
about
Yeah.
yeah, how we talked about, I still entered there. Like I probably did this like a day after my fourth iteration, and then I still took heat on the trade. This trade still pulled back on me, and I remember John mentioning that when you get such a strong move down, it's like 100 points or something. You oftentimes see that pullback right there, that occurred after my entry. So like that pullback is that pullback that we were kind of just discussing with Jack as well, which is like that the micro trend break, which is like the impulse out, and then you get this like kind of like almost like a macro type pullback, which is almost like the actual reversal, which is not part of the trend line break. But I mean, I don't know. Like it's a tough one. I could see both entries. You'd probably be all right with both entries, like on the pullback on this one. That's after my entry.
I think, I mean, for me, looking at this, like, I don't know. I mean, I would probably be in someplace kind of where you are, to be honest. Like, because you're seeing. Okay, so here's what you got. Now, the only thing that I would question here is the key level, and that's really critical. And I don't see a big figure or anything like that, but it looks like low of day at least, right? Something like that, and due to the profiles. But I mean, this is what you're leaning on, and this is the whole idea behind the strategy, and this is how you start to build trust in it, in my opinion. You're leaning on all of this absorption, okay, or filled liquidity passively. It is absorbed down here, okay, fully. And now you know that there's a lot of buyers. Okay. Now, are you at a key level? Okay, you're at low a day. And okay, momentum is pretty dang strong here to the downside. But you're already starting to identify also, these pockets of buyers, and you do see kind of a transition start to unfold. Like I don't know. I mean, I get pretty aggressive with it, and I think the break of structure would be up here, and yeah, it kind of trades up into this structure here. Maybe look at a bigger break of structure, up in here, something like that, after the pullback. I don't know. There's, kind of some shades to it here, but this held. Okay, and the idea and the concept in the trade is still there. We got the low of the day. We have passive accumulation. We know there's buyers. We know there's aggressive buyers coming in now too. We get one more hit here, fails to go lower, and then we get more aggressors up in here, and then it's off to the races. This is a tricky one, I think. To take a look at, and I love that you did 5 iterations of this, and we're still looking at things in here for a second time. But anyway, this is the feedback that Vinny gave you. So I'm going to throw it over to Shark, and if you got any feedback on that. Shark, you there?
Am I audible?
Yes, now you are.
Okay. Due to all my recent mic problems, I have a new headset. It's got a weird mic on the side that I need to pull down to turn it on. So, fantastic trade, Xavier. I love the trend lines. Love your entry. To me, that's a minor rally high break. I'm always looking for that for my efficient entry. It's just a fantastic trade. Got that Tarantino blood liquid target. Front run exit to perfection. Good stuff.
I appreciate that. And the funny thing about it is, I think I think I posted this just last night, as kind of like an example of like what a trap might look like, where you have this like extra liquidity down there and the market just kind of has a strong move down. And, even though I posted that last night, where the market kind of, does this move up, breaks the initial trend line, like what you just said, and but it still continues to go down. Well, today that kind of happened near the cash open, and I fell for it. I fell for the trap, and I opened my day kind of poorly based on that. And it's just kind of funny how like we keep doing these trades, or we keep doing these repetitions, and we keep doing them, and it still happens. You still forget that all these things that you kind of ingrained. So it's like there's so many things to consider when we're trading. So I still fell for the trap. I started my day kind of poorly, got a little bit emotional, and lost a little bit more money today, based on that loss that I took. And then I finally, capitalized on it, or I finally kind of made up for the losses, but later in the day. But the point is like, it's kind of like I've just posted this last night, I think, as an example of like what I was trying to say, and I did it again. I fell for it anyways.
What Bogdan told us today was pretty interesting. He works with these guys that trade massive size, and he said that doesn't really go away.
Mhm.
We just I guess have to learn how to manage ourselves better as we grow. But that may, that the falling for the trap's always going to be there. The market does the same thing over and over. I guess it's how we manage ourselves in that situation. But this is fantastic work.
Great points, man. Thank you. I appreciate it.
John, why don't you, if you jump in, I know what you're going to say. I know exactly what you're going to say, but I'll let you say it. I'm not jumping in.
Well, actually, it's like what you were saying, Bruce. Without a key level, it is a bit of a tough one. And that was a pretty strong move to the downside. What is key with this is the liquidity showing at 23,680, right? Yeah,
I
you knew
knew
that.
it.
I knew it. You know it. Still would like to have a key level, and you do have some nice layered liquidity that's getting filled on the way down, so that's some nice passive liquidity. And these are big players. They plan for that, and so when you do get that volume coming into the market, which you have indicated along the bottom, that's a good condition. These are good elements to make a case for the long side, but I still look for that pullback. If there were a key area that they were spinning on and making you turn on, that would be something different. And like Bruce was saying, this could be um, the bottom for the day, but you don't know that in real time. The idea is that you're looking for that key level. Without it, you're looking for a pullback, a little bit more of a pullback. Where you did was just fine. Really, I think it would be splitting hairs to say that's a bad trade. It isn't. It's a very good trade. And like I said, the key driver is that liquidity above at 23,680, which you played that perfectly. Yep.
Yeah. Yeah. So you got 2 weeks worth of feedback on this one, DNT. Guys, there's not a whole lot of people left in here. I think maybe we kind of cut it loose. I don't know how you guys feel. But maybe we're doing the it's only in Discord all week type of thing here. So maybe we can next, or we're doing it, I think, till the end of the month. Is that right, Dan? I think so. But anyway, it's we're just trying to build the community in here and get people more engaged in here. So anyway, yeah, I mean, God, you guys are doing so great in this pilot program. Really, it's really great stuff. It's great to see. It's heartwarming, and we're on the right path here. So from the Bogdan webinar, I'm serious. Like we'll invite him in for a pilot program review, and he's aware of the process. I don't know how much I've detailed him or divulged to him about the process, but he was like, "Oh yeah, sounds great," you know. And we'll find out maybe a little bit more. Maybe we can streamline it even better, and you know, get this to work even better for us from some of his feedback. But anyway, you know, understanding this, you know, it's really good to hear some of these things about the context, and starting to kind of just get a feel and understand how things work. And instead of trying, and it's like the rainforest. It's complex. There's lots of things going on. It's not mechanical. It's not a car. It's not a math problem. Is my saying. I always just say, like, everyone wants to make this into a math problem, and it just doesn't work like that. I mean, heck, in fact, even the edge part, I'll bring that up when we meet with him. The edge in here you guys are building, you can see it's not like, you know, oh well, I've got like you know, a percentage this or that. You're building like confidence in this process, and you're understanding the order flow around these key levels, and that won't go away. I don't think that's going to go away. I think the market has to work like this. So you know, it's not as exacting, which can be maybe a little frustrating, but I think it's the right path. So anyway, I don't know if you guys, Shark, DNT, or John, have any questions on that, or any comments
I do have
on
a
that?
question on this strategy. Is time of day a consideration, Bruce? Have you found
Absolutely.
it? Okay. I mean, I don't think it would be something you want to do 15 minutes after the open,
That's right.
right? I mean, okay, all right. Now I haven't looked at the journals, but is there a field to record time of day, the time of day of the trade, of the
Well,
entry?
the one thing that's kind of lacking with the replay files is the bigger picture. So you know, I can't capture. I mean, maybe I can take some screenshots or something like that, but then it kind of is a spoiler. You know, the replay file, it's you just have to kind of trust and say, like, it's going to go in, it's going into a key level, basically.
Okay.
And time of day, I mean, like, absolutely, it's a big part of it.
Okay. Okay. Very nice. Good.
That's a great point to bring up. Just like the past 3 weeks, I've been kind of bringing that up, which is like the point is to build up the strategy or the trade or the setup, I mean, and like that's kind of what you've been doing. And then the transition to forward testing is kind of that transition to like the playbook. And the playbook includes like that time of day and the higher time frame key
Yeah.
level.
Yeah,
Yeah.
it gets more complex for sure.
Yeah.
Due to those factors, but and then again, I mean, that's okay though. You've built, like, you know, some strength here through the reps to understand what this looks like and how to trade it and what you're looking for. And then now you're in you're in the live environment. Well, things are going to move slower for sure. Now you're you're trapped looking at this thing,
Yeah.
and you know, you're going to have to be patient. These are the things, like, you know, that's why we move into forward testing and demo, and then you get good at that, then you move on into the live. So anyway, guys, let's wrap it up. We'll call it a day. Thank you so much, coaches. Really, it's really great to have all this feedback and expertise in here. and great community as well, leaning on each other, giving each other feedback in the chats in here, and then in the nuances as well in some of these trading opportunities. Yeah, thanks everybody. We'll wrap it up. We'll call it a day. We'll see you tomorrow.
Okay, thank you.
All right, thanks guys. Bye-bye.